Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs and articles on StockCharts.com as well as ospreystrategic.org. So the main problem with the bull market is it's uphill all the way, and we've definitely found that about 8 out of the 11 sectors, they have not been able to get positive on the year. And the other 3 sectors, consumer discretionary, technology, and communication services, have been in very much a bull market. So it's really been an odd time. So what I want to talk about today is the industrials and the banks are starting to rally along with materials, and I'd like to see the energy sector. I'm expecting the energy sector to join that party as well. But we're going to talk about those 2 specifically. So the small caps are now surging up, and that's helpful. The large caps are still climbing, though, so they haven't really paused. But there has been a rotation into other sectors, and that's quite valuable here because what we want to see is all parts of the economy doing well, and a rising tide tends to lift all boats. And that's how we'd make... we'd have a more successful backdrop if it wasn't just one sector. So this is quite positive. And if you're interested in the type of work we do over at Osprey Strategic, feel free to head over there, ospreystrategic.org, and for just $7, you can try a 1-month trial offer and go back and look at all of our monthly conference calls, and all of the previous newsletters and all that stuff is sitting in there. And as always, thank you for taking the time to watch Market Buzz. Now let's get into the charts. So here's the S&P 500 and the Nasdaq 100. These are the ETFs that track them, the SPY and the QQQ. And what we've got here is the SPY has been a little bit sideways for the last 3 days, no big deal. And the Nasdaq had pushed up here last Tuesday and has now got back to that level. It's just kind of losing its upside momentum a little bit after that frothy run. This was just an unbelievable run here. So even if it pulled back a little bit, that wouldn't be a huge problem. It could probably use the breather. But what I like to see was not just the small caps, but other sectors, large cap names in other sectors starting to rally as well. So that was probably more important. And when you look at the SPY, it just looks like we're breaking out of this base here. That doesn't look like a real problem to me. The Nasdaq obviously pushed up quite nicely. So very strong start there. And if we go over to some of the areas that I'd like to focus in on, like IWM and IWN, which is the Nasdaq or the Russell Value ETF. You can see this is up quite nicely, up 3% today. This was up 2.63. So the value sectors are really starting to take off. And you can just see their StockCharts technical ranking has been weak. And all of a sudden, these are starting to really accelerate. And it's literally since the first of the month. So we're talking 3-4 days here that it's starting to move. So it's not like we've missed the move by any stretch. What we want to see out of these areas is that, obviously the 200-day moving average is pointing down. Eventually price would pull that back up and start to convert this into a much bigger rally. That would be way more helpful from an analysis perspective. And when we look around at the Dow Jones Industrials and even the Canadian market, what we see here is, so the Dow had a nice surge on the latter part, well, I guess just Friday of last week, and then pulled back a little bit here. And what we'd like to see the Dow do, obviously, is break out above that. And that's a combination of 30 stocks, really 6 large cap tech names, but there's everything else in there. There's some banks in there, and there's some industrial names. So we'd like to see that turn and burn higher. The Toronto Stock Exchange, you can see the lows continue to hold here, but it's really been a camelback market where it just keeps rolling over. And what we'd like to see, obviously, is that hold, and then we do have an uptrending 200-day moving average, but I must say it doesn't feel like it's uptrending much when we're really back just barely above where we were in November. So trying to get going, but we are looking at the potential for PPO cross on Wednesday, and the Dow just put in one of those crosses, so that all looks pretty bullish. Now, we've rallied in front of the news here. We were all worried about, or not all, I wasn't worried about them signing the debt agreement. The politicians will stay in the limelight as long as it takes to stay important and relevant, and I think they did a good job of that. Sure enough, the debt deal got signed, and it was somebody else's money. I don't know why it would be a problem to get it signed. So anyway, we'll see how all this works out, but to me, as we try to climb out of here and get the rest of the markets participating, we are seeing good follow through in the stocks as they're starting to rally. And I think that's probably pretty important. So here, this is just the summary list for what worked for one day, but we could also go for what worked for 1 week. Remember how I said it was just the start of the rally, really, since June 1 that we started to see these names pick up. Now, this bar up here, I don't know why. I guess this Armstrong flooring, we could get rid of it at 7 cents. Let's just do that. Delete the chart. Is the change, and again, not really looking for a 2-cent stock, but some of these names are really starting to move nicely, and these charts are taking off to the upside. Airlines have been looking positive. It would be nice if they finally got going. It's been a really interesting one. So let's go just look at the airlines again. So what we see on this chart here, again, really hadn't done anything for 3 weeks and just starting to walk out of here now. But this is finally starting to turn up. And if we go look at Delta Airlines and UAL, those two charts, pretty similar, choppy, but trying to move higher. And then on the big picture, still, not really a positive, but we're starting to see the 40-week moving average or the 200-day moving average start to tilt up. So that's a positive. And again, they're part of the transportation. They all look great in terms of how busy they are and that kind of stuff. For some reason, those stocks can't get going. Anyway, they look like they're positioned to start turning up now. Now, if we just click on the scooter ranking and look that way, we can go in and try to find out what are the strongest stocks right now in these sectors. And, builders material still really strong. Fortress Transportation, General Electric. This one is a big surprise to me. It just keeps going. And again, it split out part of it split the company into different pieces. And as it did that here, this has really migrated nicely since the beginning of the year. So that looks pretty strong. This name, Quanex, I've never heard of, but that's a pretty nice push in a couple of days here. So we're really seeing some big surges in some of these names. New Tech Capital, Yellow Corporation Trucking Company, up 19%. So again, if trucking could start to get going, that would help. And we have Old Dominion Freight Lines, which has been lagging at best. That's probably not even a lag, that's ugly, pointed down. But we're also starting to see some of the other things like the railroads starting to work their way higher. So CSX and Union Pacific. And what we want to start to see here is see how this is just sitting up against the top. I'd like to see that breakout. And here's Union Pacific, still downtrending, but really hasn't lost anything in the last 2 months. If we go to CP and CNI, CP just did the big takeover of Kansas City Southern. So this chart's trending sideways so far. Again, want to see these rails start to break out and move to the upside. When we look at their industry group specifically, and the same for the trucking, it would be nice to see these start to outperform the S&P 500. And again, they haven't really done that yet. So we don't want to start to see these charts fail. Transportation is an indication of how much is moving in the economy, and we've talked about a trucker freight recession where there's a lot less freight moving and there's a lot less cardboard boxes being bought and moved and that kind of thing. In order for the economy to really start to turn up, we want to see these charts start to break out meaningfully. So they have not yet, but some of the industrials, if you go look at some of the heavy equipment, they've been moving up. So here's Manitowoc. This one, really nice sort of breakout here. And when we look at names like Caterpillar and Deere, so what we're starting to see is, that's a pretty nice move by Caterpillar. And again, Deere starting to walk out of here. Now, when you look at Deere's chart, it's awful. It's been just declining since December. So while everything else has been trying to get fired up, Deere has been going the opposite way. So it's been on sale for about $100 off. We're finally getting this kind of big downtrend starting to break. So Deere is one of those names that could really start to move higher. I think there's some pressure on the grain on the agriculture space right now due to the dryness of conditions, but hopefully that gets solved and we start to see some move. But Caterpillar here, you can also see it doesn't take much to get to a new 3-month high. It would just need to move up another $5 or so, and all of a sudden it would be at a 3-month high. So we're starting to see some of these big areas move, which I think is a really important change in the marketplace. And then some of the areas like business services, this LegalZoom, it was a pretty sleepy stock. And then all of a sudden, beginning of the year at $8 and now sitting at $13. So really a strong move higher. When we go look, just if I was to record them, I've got the numbers on the front here. So if I wanted to record them by their current scooter ranking, and you can see, this Circor used to be 278th on the list, and now it's, the second best chart out there. So what we have to do to get rid of those numbers that I put on previously, we scroll to the bottom of the page here and I have to go back to the top, and I need to select all and then remove numbers. So when I do that, this is going to take off all the numbers on the front of the listing here. And then what we can do is go back into summary mode, and we have to pick a sort order. So that's the reason we have to go back into the summary mode. And then from here, we're going to use the scooter ranking, but we could also use, we could sort it by industry and scooter ranking. And then this helps us just kind of concentrate on what's working best. So let's say that we like that. We're going to scroll down to the bottom and hit number in sorted order. So now that we've got them sorted, at least in the strongest, what we can go through and look for and see which industries within industrials are really doing well. And so these aerospace numbers, you're trying to find stuff that has lots of components above 75. And so, here's Airbus. This chart looks like it wants to break out. AAR Corp. We've got TransDigm. This chart's been just a big climber since October. Rolls-Royce sideways recently. Embraer Holdings taken off. Here's Boeing. So you can see the manufacturing plane companies trying to get going. That would be nice to see. Planet Labs, big downtrend. I like charts like that have started a nice reversal and can start their way working higher. This Hexcel Corp wouldn't take much. But when we look through the different ones, all of a sudden, look at the airlines here. We've got 5 or 6 of them that are in the 90s, and we've got a few in the 70s here. But in general, really starting to see some positive space here. And I like that SkyWest has just been ballistic. Azul Airlines, Copa Holdings, big move there, Ryanair. So when we look through, it's one of the ways to just quickly sort and say what's working. I don't know why biotechnology is in the middle of my industrials, but we'll leave that alone. Same with asset managers. Okay, so here's building materials. And what I think I'm really surprised by the strength in the real estate area. That was one of the top performing sectors last week. and it continues to see money move back towards it. So it's quite interesting. But I would have thought, the home builders and all that kind of stuff would have been in big trouble. But these charts still look great. I mean, this thing's just flying the cement. I don't even know what GMS does. Heidelberg Cement, again, another one going up. Simpson Manufacturing. All these charts are breaking higher, and they look pretty strong to me. So there's, Owens Corning, the insulation company, Geldwin Windows, just starting to break out. You could pick any one of these. Masonite Door Company breaking out to a new high here after consolidating for the most of the year. That chart looks just fine. Patrick Industries. So again, by looking through and trying to find which industries within industrials are working and using the scooter ranking to just guide us, again, look at from the beginning of building materials all the way down to the bottom here. We've got lots that have a scooter ranking above 80. So let me just explain what that scooter ranking does. So here's Deere and Company, but when it's above my blue line at 75, so what the scooter ranking does is it compares the price action recently based on 6 different time frames to its peers. And so it goes through and says, how's the stock doing compared to the 200-day and the 150-day and the 50-day and the 20-day and the 5-day and the 3-day. And it calculates a number for each one of those in terms of how it's doing. And then it ranks those scores against its peers, so large cap, mid cap, small cap. Well, if you're above 75%, that means your stock is outperforming 75% of the peers in that group. So in this case, these are both large cap companies. And so when they're performing well, they're outperforming all of their peers. And then right now, Deere is actually underperforming 75% of the companies or 85% of the companies out there. When we go look at some of these names on this list, so if we just go grab 2 of them, whatever, Advanced Drainage System, WNS, MS, and NX. And what we see here is, the charts are starting to turn, but the scooter rankings are now starting to head back up after being awful for a while. All of a sudden, they're starting to become some of the best looking stocks out there in terms of price action. So these are at least reasons to put them back on the list and start to watch the stocks. And again, we can use that scooter ranking divided by materials or divided into industry groups to try and help us there. So again, you've got lots of building materials. You got some down here at the bottom. I don't think you need to buy the really weak stuff. You can try and find something a little stronger. I like to try and find the ones up around 75%. So here's Ingersoll Rand, a very big industrial company. And again, sitting right at 50%. So the chart hasn't broken out yet, but keep watching that one and you could find it. Right now, some of the better names that are starting to move, I think would probably be okay to go look at. For business support services, again, lots of spaces in here. Only a few in the 90s, but lots above 75. So there's a good selection to choose from. And let me go back to the scooter ranking just briefly. What I like to notice is, it's gone from underperforming in a big way to all of a sudden outperforming. Now, if we look at this chart on a long-term time frame, through 2020 and 2021, it did well. Then late 2021 made new highs. 2022, remember, everything was so ugly. This chart actually broke out to new highs, pulled back, and is now just getting started on its next run. So it looks pretty solid to me. So anyway, the way I like to think about these scooter rankings is when they start to take off, this can be pretty helpful. And again, this company had a scooter ranking up at the top for, the prior 3 years, had a rough 2022, and is just starting to accelerate now. So if you go pick this one, whatever, Advanced Drainage Systems, and take a look at it and just watch to see if it can keep going. It was loved back here. So if it could start that run again after I'll call it the 18-month downtrend, that would be a pretty nice place to get back on board a pretty strong company. So looking at the trend in the SCTR or the StockCharts technical ranking system can really help point us towards some good solid stocks. And again, just looking at some that might be in around that 75 level is a great place to try and pick them up. And then so when we're looking through here again, we want to start to see these charts as a group start to head higher. So here's commercial vehicles, and look at how this is also starting to perform. And it was one of the things I noticed, like here's Terex Corp. This one's starting to turn up. We've got Finning Packard here. Looks like it wants to break out to new highs, so that would be for trucking. Again, right around that 75% level. Wabash, this one looks like it's trying to get going. So a lot of these names are starting to perk up. Here's Allison Transmission, and I think Eaton as well is in this list somewhere, and I can't see it right now. But starting to see all these start to lift. And again, Caterpillar starting to perk up. So I like focusing in on these industries and then trying to find the strongest ones. So in defense, there's only one or two that are up in the 90s, whereas in the other ones, there's quite a few more. So I would kind of hang out over in there. Looking at delivery services, none of them are in the top, so I probably would avoid that. Again, getting into the diversified industrials, only a few names in the diversified, so it's probably better off to go pick some stronger industries. But one of the things I really liked, all of a sudden these heavy construction industries have been doing pretty well. There's, it's not a large list from here to here, but nonetheless, they're all starting to perk up. And the worst one in the group is 16, but very quickly you're at the 75 level. So the majority of that group is in the top quadrant. So that's another one. Industrial machinery. Again, starting to use these scooter rankings to bring the names forward as they're breaking out. And I think there's a lot of helpful information here. So I encourage you to do that. So maybe I'll just refresh how we did that again. So we're into a list of industrial stocks, and you can go get that by scanning for it. But you can also go to the charts and tools area and look in there. I'll show you in a second. But what you have to do is get the numbers on here, and you can rewind the tape and watch how to get the numbers. But the sort order, in order to get that right, so let me just screw it up here and put a bunch of different stuff in. What you want to do is sort by scooter ranking and then sort by industry. And what it's going to do is give you the top scooter ranking and then group the industry together. So whatever you touch last is the final sort order. And it'll do up to 3 sort orders for you. So I think that's a pretty helpful thing to work with. Okay, let's jump over into the banks because they've been performing pretty well lately. And I pulled up the performance table. So over here, I was using summary. This is using performance table. And the idea here is you can look at the different periods of time to go back and compare. And I think what's really meaningful here is all of a sudden in the 5-day and 1 month, look at how many banks are now positive. And if you think at the end of March, we were wondering if these banks were all going to start to fail together. So I must admit, I was expecting more bank trouble after how quick we started to see it in the rise in interest rates. But I had heard somebody mention this morning that the Fed window to go help the banks and loan money overnight or whatever has actually returned to the levels it was at before we started to see that stress in March. So that seems to say the problems are going away in the bank. We're not really seeing the trouble there. And these names are starting to rally meaningfully. So if we go up to the top of the list here, Comerica, this one, took an ugly dive, right? 80 to 40, and now it looks like it wants to start making the turn to go higher. That's probably one of the biggest examples. Here's, a lot of them in this 5 to 8% range. Again, this is in 1 week. So really strong performance in Key Corp and State Street. These were some names that were, hit pretty hard when all of a sudden we started to see these banks roll over. So perhaps they can get back on board and make a serious run to the upside. That is something I'd like to watch for. One of the Again, we can go look at the scooter rankings on these, and they're, for the most part, are going to be beaten up, right? You're looking down at the bottom. But as they start to come out of their bases, it's not a bad place to look. And when we look at the industry group specifically, so I'm just going to head over here and bring up two different ways to look at it. So XLF is the industry, the sector, and then KBE is the bank ETF, but KRE is the regional bank ETF, or one of them. And so with that, we can go take a look at what's going on here. But again, you can see the scooter rankings were relatively strong for the whole financial sector, fell off a cliff in March. Hasn't really started to perk up yet. And the regional banking, scooter ranking basically says it's the worst out there. 98.5% of the industries are performing better than this bank ETF. So not really a strong place, but if you're looking for dividends, some of these banks are paying pretty healthy dividends, and you're able to pick them up, again, 30, 40, 50% off. If they're going to make it through the other side, that's pretty important. And one of the charts I like, or one of the things I like to look at, is the trend line on the PPO. And what I'm looking for is to make sure that it's starting to break a more meaningful trend line. And what we're seeing here in June is literally since last November, the momentum in the banks has been each peak has had lower momentum. This is starting to change, and that's a really positive look. For anybody who's watched my work before, that's one of the things I really like to see is these longer term changes in trend, and it makes for a pretty nice place to get on board. So think about that as we're going forward. But again, you can go into the banks and look up into the financials and look up all those different components. Now, the one thing I did say is you could go find this without having them all set up in a previous chart list. And the way to do that is to go into sector summary, you'd go into financials or into industrials. And now you've got the whole list here, and you can see mortgage finance, which was one of the worst areas, now has some of the best scooter rankings. So some of these stocks are really starting to accelerate. And you can, go in and take a look at these. And again, that's one day, but let's look at 1 week or 1 month. And you can see where the changes are starting to happen. So I think that's a pretty helpful way to look. And again, this chart was awful. It was $60 a year ago. It's $20 now. It's up, 15% in a week. So there's definitely a return back into these names, and hopefully there's some help there for you. So with that, I do like the rotation. I'm happy to see it and start to see some of these other areas pick up. So specialty finance might be something that works out well. Some of these mortgage names might be better. Anyway, with that, hopefully I've given you some ideas and different methods to sort them. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.